Hey guys, what's going on? Another educational video. This time we're going to talk about institutional order flow. Get a lot of questions about institutional order flow. So this is going to be a good video. Um, we're going to talk about what is institutional order flow. Excuse me. We're going to see how we can spot the different signatures the institutions and big banks leave behind, so we can determine which way it can flow. We're going to talk about the draw on liquidity, which is important to know what the institutional order flow will be. Then some things which could aid you in confirming your bias. And at the end, we're going to do some simulation to showcase how to determine the institutional order flow. So, what is institutional order flow? It's the directional price movement of the current time. So the market moves from sell side to buy side, right? So the easiest way to spot which way the direction will go is using the market maker buy model or the market maker sell model, right? So if you can determine your original consolidation and your smart money reversal at a logical point in price, for instance, a smart money reversal could happen above an old high or inside a fair value gap or a high probability order block. So yeah, then you can determine on which side of the curve you are on. Now, order flow is determined by the algorithm looking for the highest value of liquidity. So where is the most liquidity residing? Most of the time you can spot it easily by looking at where retail has their stop losses or where breakout traders are most likely to get in. Spotting retail patterns like head and shoulders, triangle, wedge patterns, and all that kind of stuff. This way you know where is the most liquidity residing. And to add to that, if there's an up move or a down move, sometimes it leaves behind a fair value gap. And even if it doesn't, every candle that's created needs an opposing candle to be rebalanced with. So when there's buy side offered, for instance down here, there will always be a retracement or a return to origin, as some call it, back into those unmitigated order, in this case unmitigated order block and unmitigated fair value gap, but to rebalance the buy move with a sell move. Alright, so we got the same chart, right? I've outlined the buy flow, the order flow for buys and the order flow for sells. So bearish order flow from up here to down here, but bullish order flow from down here up to here. Then we're moving back into bearish order flow, back into bullish order flow, and then another time bearish order flow. So how can we determine which way we will head into? Now, you should use the PD array matrix. I've got a video on that on the YouTube too, so if you haven't checked it out, make sure you check it out because it's important to know how to determine order flow. We're gonna look for unmitigated areas of price, right? So I'm a trader who likes to go from imbalance to imbalance, and if there's no imbalance left, we go from order block to order block. And if you still cannot spot it, you can go from internal range to external range, but that's a topic for another day. So let's just look at what's happening over here, right? Where is the most? Why is this going down? Where's the most liquidity, right? You can instantly spot an original consolidation, right? So this is a small market maker sell model forming already. So you have the original consolidation, smart money reversal up here. Now price is gonna trade back into this original consolidation, liquidate all these. There's a big bucket of liquidity down here. So price will draw there, take out that liquidity, and that's why you see that retracement, right? But where is it retracing into? This bearish order block, right? Now the wicks are exceeding the body, right? But look at point 2, importance of the bodies of the candles. this body is still closing inside this bearish order block. So referring back to the PD array matrix, as I stated earlier, if you see, for instance, a fair value gap, trade it into and you're not sure where it will head to, wait for the bodies to close inside or below it, and then you have more confirmation on your directional bias. I think I explained it too in the daily bias video I have also on YouTube. So also check that one out if you haven't. So let's see how price moves. So we liquidate this lows, right? Now we're retracing back into a logical place because in this up close candle, the institutions are selling, right? So that's where it's going to retrace through. They're going to offload their positions and drive price lower. Now, I cannot see what's further to the left, but I'm assuming there's either an old low, fair value gap, or an order block. So now we're going into the buy side. You see more displacement this time than over here. So when there's displacement, there's always going to be a return to rebalance. And most importantly, if you want to have a good directional bias, go with the higher time frame. So monthly, weekly, daily, important for your directional bias. If you scalp a 1 minute, of course the monthly candle direction is probably not interesting for you. But if you trade a 15 or 1 hour entry technique, definitely go from monthly down to daily 4 hour. How do we determine draw on liquidity? That's also a question I get a lot. This has to do also with the PD array matrix, right? And I've outlined some order blocks. I've outlined some clear areas of liquidity in the form of the eye, right? Now, when we're in the buy side of the curve, where is price going to head into, right? You have this liquidity up here. So we couldn't see in the previous slide what was to the left, but this order block was to the left. We can now see it. So that's why price reacted from here. Now let's look at the liquidity again, right? So we have this original consolidation. Excuse me. There's an high here with a lot of wicks. So there's a lot of liquidity up here. Price drives through that, takes out that liquidity and leaves another new high behind. So if we take a price range from this low to this high, we need to trade below this liquidity before we're in discount, right? Because the low to the high, I have not outlined it, but spotting with the eyes, I'm pretty sure this is in the center. So everything below in this area is a discount for buys, right? So price takes out this liquidity, returns back to that order block, right? Moves down further, back into more discounts for better buys, eventually taking out this wick, which didn't hit the body of this order block, right? So if you see this, a wick just not touching an order block, there's a high chance that will get raided in the future and then actually hitting the order block and then move up. So this order block puts us in the bullish order flow. So now what are we gonna look for, right? We're gonna look for a target. Draw on liquidity, very important. So we have this intermediate term high, which is the first target, of course. So price drives through it, creates a bearish candle. Now, what are institutions and banks doing when they're selling? They're generating liquidity for more buys, right? So they're buying inside a down close candle. So this is what happens. We're moving up again, taking out this liquidity. Now I think this is Euro AUD, so it moves a little bit more erratic than, for instance, Euro USD or GU. So we see this big wick created. So this is also a lot of liquidity, but in this, refer back to the PD array matrix again, right? Rejection block. So we see the candle go back into the fair value gap, draw on liquidity, right? Move back into the rejection block, and we're breaking structure right now. So you're already seeing bearish order flow incoming, because we should have respected the fair value gap, right? So if it doesn't respect certain PD arrays, order flow is changing. So you can now anticipate bearish order flow incoming. Now what did it leave behind? It's creating bearish order blocks, because the up close candles are bearish order blocks, right? Even though there's no fair value gap left behind. Because there's a big wick in the form of a rejection block over here, you can anticipate this to be a bearish order block. Now, where's price stalling from? If you take this low, right, to this high, this is probably equilibrium. So this is the midway point. It wants to go into deeper discount. So we're heading into discount. Now, where does price need to go? It needs to mitigate some areas of price. You can see this last up close candles before it broke structure. Exactly at the midpoint, the candle's body is closing. So the bodies are very important, guys. You see this body closing exactly in the mean threshold, so the midway point of this order block. Now, there was also a high resistance liquidity run. This confirms even more we're going bearish, but that's a topic for another video. High resistance liquidity runs and low resistance liquidity runs, of course. Now, what did we leave behind down here? Equal lows, right? So that's a target. So we're gonna look for the highest value of liquidity. Now this looks like a lot of value to me because it's equal lows. We always want to look for equal lows, equal highs, retail patterns, right? So now price is breaking down, leaving behind a lot of fair value gaps. So that's a target for later. What is unmitigated? This fair value gap, this order block. You can take this bigger, beefier candle, which is probably better. Now look again at the bodies, right? Where are the bodies closing? At the top of this order block. But the wicks went through it. The bulk of the volume is in the bodies. So bodies closing at the top of this order block, and we're moving up again. So now we're going back into bullish order flow. Where is price going to reach for, right? We're leaving liquidity behind, fair value gaps, fair value gap up here, last two up close candles before the down move, bearish order block. And that's how you need to view how the order flow is moving from bullish to bearish, right? You look at the PD arrays, what is unmitigated, where is a fair value gap, what should be the draw on liquidity, very important. Now, there always needs to be a down move before an up move, right? Because we need order blocks. So we create a down move, so it's faking out retailers because it looks like a swing high over here, right? Nope. It's a bearish order block, bullish order block, which is being created right now. Now price aggressively moves into this fair value gap, right? From imbalance to imbalance. This imbalance, rebalanced to this imbalance, rebalanced. Now we're going to return back to the order block for more bullish order flow. And you can see eventually we rebalance this full fair value gap, hitting the order block, and we're moving down again. Now, why doesn't it move higher? There is no imbalance left anymore, guys. There's nothing to trade to. So see if there's an imbalance or an order block which is unmitigated. If there's not, high chances we're not gonna move higher. We're gonna move lower. For what? Another pocket of liquidity, right? So it hits that order block, displacement, right? Leaves a fair value gap behind. What is this? One low, two low, three low, equal lows, another pocket of liquidity, heads back into the fair value gap, drops, right? So this is actually almost more a video on drawn liquidity, but order flow is very important and you have to determine the drawn liquidity. Alright, some tools you can use for your bias on institutional order flow. You can do fundamental analysis, right? Interest rates. Maybe there's a war going on right now with Russia and Ukraine. You've got the COT report, right? Commitment of traders. You can see the net long or short positions of the commercials. You can use bonds to see if there's a divergence between if you trade DXY, if you trade the dollar, right, Euro USD, and you see the bonds doing a divergence, and it's matching up with a higher time frame PD array on the DXY. That's probably going to be a video for another time, but I'm not going to explain it over here right now. And seasonal tendencies, right? Some months move bullish and some months move bearish. It's all available to the public, so yeah. I think that's that's it for now. Let's hop into a simulator and then we're gonna do a live example. Right guys, we're back with the simulation right now. So we've got GBP USD over here. So let's first determine where our liquidity is residing, right? What has happened already and where are we most likely to draw? Obviously we had a big displacement. Let's see what it created. So we created liquidity up here and this liquidity got taken out, right? Now we're not moving past it as we should because we created this bullish order block, right? This last down close candle before this move up. We took the liquidity, so you want to see a draw higher, but we're seeing right now prices unwillingly to move higher, so we can expect this liquidity to be a high resistance liquidity run, and the order flow should potentially go bearish because we're in a big downtrend over here right now, because we are bullish here and now we're drawing bearish. We hit this order block over here, so that's why the move up happened. We took this liquidity, right? So where's the next pocket of liquidity residing? We're unwilling to trade lower, so now we need to take this low. So that's how I determine where my draw on liquidity should be. So liquidity on the upside has been taken already. We're unwilling to move higher, and this is the weekly time frame, right? So if it doesn't move for 4 weeks above this high, there's a high chance it will never, or never, at least not in this context, will move higher up. So let's see on the daily chart what we're doing. So we have more details right now. So we took this liquidity up here, right? Move down, rebalance this imbalance. Then we moved up, took out this liquidity, and this is the high, right? On the weekly time frame. So this has been taken, price is unwilling. Now what are we leaving behind? There looks to be a lot of liquidity over here, right? So how do we determine where we should get in? That will be on a lower time frame, but I only have the weekly, daily, and the 4 hour, excuse me. So right now, I think it's a Monday. Yeah, it's a Sunday opening. So let's skip a daily time frame to see what happened on Monday. So Monday's trading up. So remember with the weekly open, right? Let me see if I can put the weekly open on it. If I can find it quickly, otherwise we'll just move on. Yeah, so weekly open. Right. So the weekly... this is Sunday's candle. Okay, so today is Monday. So this little candle is Sunday. So next candle. So we're trading above weekly opening price, which indicates we're going to move bearish, right? Because you want to be a buyer below the weekly opening price and you want to be a seller above it, right? So what is the most likely PD array we're going to head into? Now this bearish order block which is being created is being respected by this up move, right? And then we're leaving liquidity behind in the form of LR down here. So price should not exceed this area, right? So let's draw it out. Price tapped multiple times already in it. Body didn't close inside it, so there's still a chance body can close inside it and then drop. So let's see how it moves. So we're forming displacement, right? Potentially creating a new bearish order block. What does it look like on the 4 hour? Right? So liquidity purge over here, full rebalance. I don't think there's a need to rebalance this because it's unwilling to move down. Now you also got a small trend line going on. If you spot it, right? We're looking for retail patterns. So this is a retail trend line. So this makes me even more confident we should draw lower to this LR and fully liquidate all the touches of the trend line. So let's go to the daily. Next daily. Moving down. And I think we took the liquidity. actually leaving behind equal lows. So they should get taken 100% because it's not going to stop over here. And we took liquidity right now. No, still not. So we're in the next week right now. So yes, the next week starts off with trading below weekly opening. So the chances that we move up during the week is high right now, probably to draw into this bearish fair value gap. But yeah, you can see already how I determined, right? If we go to the weekly, the target is still down here, so there's a lot of room to go down still. The daily, easy targets, trendline liquidity, bearish order block respected, right? So go over those PD arrays, look where the draw on liquidity is, and you should find your order flow. Now let's just skip ahead and see what happens. Right, so we're trading down, moving back up. Are we gonna take out that low eventually? And we took out the low eventually. You can see the body is still closing inside this, a little bit high for my taste, but I'm pretty sure if I take this order block, yeah, this one is better. It's closing in the mean threshold, right, of this beefier candle. So this can still be used as a bearish order block. And eventually we took out the liquidity as expected on the weekly time frame. So I hope you found this simulation helpful. We didn't do any entries, of course, but yeah, this is how I determine my institutional order flow, my bias, and all that kind of stuff. So guys, I hope you found this video helpful. It took me a while to put together. If you're not in the Telegram, right, I will put a link in the description. Daily analysis, they're very accurate as of late. The last couple months are very accurate. We're almost at 1,000 subs in the Telegram. That's insane. Also, the YouTube is growing every day. I love to see it. Really appreciate all of you. And if you would like to share this video or comment or like at least, I would be grateful. And yeah, guys, I wish you good luck and good trading, and until the next video.